Hello and welcome to the Cryptocurrency News channel. This is the TAFA MA and chart analysis for February 15th, 2022. We got a big sigh of relief today, actually, because the Fed didn't do anything yesterday and the Russia-Ukraine tensions have actually subsided. Those are the two big worries we had coming into the weekend. Now, a lot of people say Russia's going to attack Ukraine tomorrow. I somehow doubt that. I think it's subsided, and that's why the market actually went up today. Obviously, like people were expecting maybe an interfed meeting interest rate yesterday. That did not actually happen. And they were expecting maybe Russia to ratchet up the pressure today. That did not happen. Vladimir Putin did actually say that America's deterrence towards Russia constituted a national security threat, but that he was more than open to a diplomatic solution with both Ukraine, NATO, and the EU. So that obviously eases tensions a bit. He did actually move about 30,000 soldiers from the border where they were doing their drills back to their barracks further in Russia, which eases the tension a bit, and hopefully we can find a diplomatic solution. There's no promises right now yet, but it looks like they want to resolve the issue. Putin seems to know that they can freeze his financial assets, freeze trade, and impose penalties like the Nord 2 pipeline and other trades and sanctions on Russia. And the Nordic countries are very, very much united against Russia in this particular cause. I don't think he thinks it can take Ukraine in a giant blitz, and that might actually cause Russia more problems than it's actually worth. So I think Putin's plan all along was basically to make threats and essentially try to force the UN, or not the UN, NATO into negotiations to get what he wants. He didn't actually get that, so NATO held its ground, and he made a calculus that it just wasn't really worth invading Ukraine, regardless of how many troops he has at the border. Some people are saying it's a fake out and he'll invade tomorrow. Somehow, I really, really doubt that. So the Russia escalation has actually settled down. We did not get into fighting, at least not yet. That can always change, but for right now, things look pretty decent at this point, better than they've looked in the last 2 weeks. So if you actually look at the graph today, if you look at the 1 minute graph, all you see is this giant thing here, but that doesn't look really big if you just look at the 5-day graph. Essentially, this is basically yesterday and today, like this section. Here is basically yesterday night into today. We had a big rise here from about 42 to 43 and then to 44. We're above 44 now. So looking back at the bigger graph, we're not quite out of the woods yet because the neckline here is still at the same plateau here. We still haven't gotten to this plateau here, which we actually need to get to. And we do actually need to get to about 49, 50,000. But I don't know if there's enough bullish sentiment to actually get us that far right now. Yes, the Russian news is good. Yes, the Fed didn't raise interest rates, but there's like this looming thing in the future where the Fed will raise interest rates in March, and we don't really know by how much. Plus, the Russian escalation has driven up oil prices and has driven up commodity prices as well. There's still a chip shortage and supply chain issues, so that's all going to factor in. So I'm not really sure if we have the momentum to actually reach 50,000 or not. If you had to ask me, I'd probably say we don't have the momentum to reach 50,000 until at least after March. I do expect, as Omicron's also down about 80% in terms of infection rates. So according to that, we should be lifting a lot of these health mandates soon. And I think when we lift those health mandates, people are able to go back to work as normal. I do actually think that a lot of these supply chain issues will actually start resolving themselves. And when that actually happens, I think a lot of these shortages will go away. And that will definitely help inflation some. And of course, all the government stimuluses and stuff have actually stopped. So people will actually soon need money, especially at these inflated prices, and they'll have to go back to work as well. So I think the labor market is going to get better as we get into the summer and as we get deeper into summer and fall of this year. So I would definitely look to after March or April for a big rise because inflation is still a problem right now because we still have supply chain shortages. But as those things clear up towards the end of the year, I do believe we'll actually go up then. So I don't expect an extended bear market, but it would be hard unless we start liquidating a lot of shorts. And people did actually take a lot of shorts over the weekend because they were betting on World War III, which is, by the way, is always a bad bet. Don't do that. If those shorts, a lot of them start liquidating, we could push towards 50,000, but I still don't think it's a long-term gain, even if we do. So we essentially have, right now we're kind of at a stalemate. I do think it'll probably go up in the next day or two, but maybe not all that much. If you look at the technical analysis, they say just as much. If you look at the one-day technical analysis, we have buys all the way down from 10 to 50. However, the 50 EMA is still less than the 200 EMA by about 4,000 points. We would actually need to go past the mid 40,000s to actually flip that. And if we actually do flip that, then we can actually get into a longer-term bear market with a golden cross. But right now, basically like maybe bullish for the next day or two, but after that, it's much less uncertain. As for the oscillators, they are completely neutral. The average directional index is quite weak now. Commodity channel index is neutral. Stochastic and relative strength index is neutral as well. So no buy or sell signals on the oscillators. On the daily, like I said, really short term, because the situation just cleared up, I would say it's pretty positive. Longer, like beyond a couple of days, I'm not really sure, because anything can come in and hit us, and any kind of Fed announcements or anything like that could definitely change the winds. On the 1 week right now, the exponential and the simple for the 10 week have actually moved to buy, but just barely. The rest are still sell, except for the EMA for the 50. That's actually switched to actually buy now. So like I said, maybe for like 2 or 3 days, the rest of this week, it is actually a buy. The oscillators are pretty much neutral, no signals there. But just this good feeling from having like Russia back off a little bit, and the Fed not raising rates, I think that will carry through like maybe Wednesday, Thursday, maybe Friday, and hopefully we can actually go into the weekend sort of positive, but I don't think it's like a huge positive sentiment like 2 weeks ago, so I don't expect above 50K, but I could see us going into the upper 40Ks, riding on this wave of goodwill, but it probably would bounce back after a while, especially as we get closer to March, and as those interest rates that loom ahead come. Everyone knows that they're raising it by at least 25 basis points. The question is, will they actually raise it by 50 basis points? 25 basis points, I think the market could easily take that and will actually be going up. 50 basis points, I definitely think the market actually is going down. Uncertainty, the market does not like, so I don't expect a giant jump before March. Could be wrong, but I definitely expect, like, if March is only 25 basis points, then we will actually jump after that. On the monthly, what we see here is the exponential and the simple moving average still sell on the 10, but we're very close to flipping the EMA. If the EMA on the 10 flips, then we might actually have some action. The oscillators are somewhat neutral. So like I said, the rest of this week, maybe buy unless some really bad news actually happens, or if Russia reninges and moves troops to the border again. That's kind of a coin flip type of thing. What Putin and Biden and the rest of the EU is going to do, we don't really know. But overall, like, the winds have actually changed. It was bearish going into the weekend, but the sentiment is much, much more bullish now because there's more certainty that Russia's probably not going to attack, and the Fed won't raise rates until mid-March. By the way, that date in March is March 15th through 16th. So I think like there is time for the EMAs and the SMAs to actually switch to buy, which would maybe we go for like a bullish period of like 1 or 2 weeks until we get closer to that interest rate rise date. So that's the news for today. Let me know what you think. Like and subscribe and hit that bell notifications button. Thank you and have a nice day.